All right, let's go into each of these one by one. Let's go into the expenses. Now, this expenses tab, you can basically think of it as sorting all of the different types of forms that are under the vendor section. So in other words, if I open the hamburger, we've got all of these types of form: expenses, checks, bills, pay bills, purchase orders, and so on and so forth. And I'm going to close this item. So if we go under here, it's sorting those transactions, but just those that are basically under the accounts payable or expenses cycle. So if I hit the drop down here, we've got all transactions. We've got the expenses. So expense forms are the forms like a check form with no check number. It's basically an electronic transfer type of form, and we can see all of the expenses. So the type of form, the number, the pay, the category. Category is the account that it hit. So that's what account is on the balance sheet and the income statement. And then the total. And then we have the bill. Now this would be the most common item, but you might not always go into it here because you have this other tab specifically on the bills. Why are the bills going to be the most common place that you go to when you're in this center? Because the bill form is the form that increases the accounts payable. This is where we have to get into this kind of terminology a little bit. And that is, if you say bill, just in normal language or even in accounting terminology, it's somewhat ambiguous in terms of what do you mean? Are you billing the client? Because we could bill the client, we might call that a bill, and then we're going to hopefully get revenue. Or we received a bill from our vendor like the telephone company. So we can use bill interchangeably. However, in QuickBooks and most accounting software, we have to once again get more specific on the terminology, labeling the bill from the side of the table of us purchasing. So a bill to us means that we're the person purchasing from the vendor. And when we bill the client, we might still use that terminology, billing the client. But in QuickBooks, the form will be an invoice. So we invoice the client and we receive the bills. The bill from a form might say invoice on it. Why? Because the person that sent us the bill, telephone company, for example, it's an invoice to them. They're billing the client. They're invoicing the client. We're getting the invoice. To us, it's a bill. So more specifically even than that, the bill isn't actually the email or the form for QuickBooks. The bill is the data input form. It's the thing that we're entering into the system. So in other words, I could get an actual paper bill or an email bill from the telephone company, which says invoice on it, but it's still going to be a bill to us in essence. However, I might not enter it into the system as a bill because I might just pay it off with the bank fees, meaning when I enter it into the system, I paid off the bill form with a check or expense type transaction, just simply decreasing the checking account, possibly with the help and use of the bank fees. If I enter a bill into the system, that specifically means that I'm increasing accounts payable. That means there's no cash involved. I'm going to increase accounts payable. The other side's going to go to the expense, for example, and then I'm going to pay it at a later date, hopefully trying to pay it as late as possible without getting hit with any penalties. So that's why the sorting of the bills is going to be really important, because that's the whole point of tracking accounts payable and not paying the accounts payable when it becomes due. It's because I want to track it and pay them as late as possible while not incurring a penalty, hopefully while taking advantage of any cash discounts if I can, and while hopefully not annoying or getting angry my vendor as I try to pay them as late as possible. That's the game on the accounts payable. So here's all the bills that have been entered. When you pay the bill, you're going to pay it with a pay bill form, which is basically a type of check form or expense form, but it specifically means the accounts payable will go down. We'll talk about those forms more in detail later. Here is the pay bill form. So notice it says pay bill form, check or credit card. So normally what happens is accounts payable goes up. You can see this on the balance sheet. So accounts payable is going to be a liability. So accounts payable goes up when we enter the bill. If I go into this accounts payable, drilling down on it by just clicking on it, we're in what's called the transaction report. And you can see the bills increase the accounts payable. That's what a bill form does in QuickBooks. The pay bill form decreases the accounts payable. And the other side goes where? Well, it's also called a check form, meaning it's an expense type of form. It decreases the checking account. Why don't they just call it? They might call everything. Some software simply calls all of those forms a check type form. The check type form is the form that decreases the checking account, whether it be a check or an electronic transfer, paying off accounts payable, paying for expenses or fixed assets. And the reason QuickBooks wants to basically allow you to see what's happening with the transaction type. So the fact that it doesn't just say check or expense, but rather bill pay, means this is a specific form that isn't going to be going, the other side of the transaction won't be going to an expense. The other side of the transaction is paying off, in this case, this particular bill. So that means that if you want to know the expense that was actually purchased, you might be able to determine it by who you paid. In other words, if I paid the Verizon company, I would know that was for the telephone. But if I don't know that, I'd have to go into the actual bill, because that's the thing that I actually entered the category, in this case, legal and professional fees. So those dang lawyers I paid, that's the dang lawyer. So I'm going to close that up. Not that that was a good lawyer. That lawyer's on our side. I'm going to go back to the report summary. Not all lawyers are bad, I guess. Let's go back to the first. Okay, let's not get in. I'm getting traumatized talking about lawyers. All right, let's go back to the first tab. Now, it's possible that you pay off the bill with a credit card, in which case it would be a similar transaction, but instead of decreasing the checking account, you'll be increasing the credit card. So this is one way that we can sort it, and then hit the drop down up top. We have the check forms. Check forms are just like expense forms, except they have a check number for writing checks. These days, a lot of people don't use check forms because if you're trying to automate everything, you kind of want to remove the check forms. However, many, especially older people, really like check forms still. They like their checkbook. They like, writing the check and mailing out the check. They feel it's tangible. It's not this online cloud kind of thing, right? So if you have to do that, then you're going to enter the physical checks when the person actually writes the check, whether you print it out of the system or not. And you have to check, and you have to basically track the outstanding check using the bank feeds. And then you can look in here and determine the checks, which you might have to do more often than the expense transactions, because you're going to have the added question of, did the check clear or not? Did it clear the bank? Did the other person cash it? But if you want to simplify the process a lot, you're going to try to convince people, let's remove ourselves from the checks. Let's automate onto the electronic transfers, because that's just so much easier to do, and it's becoming more secure. But again, there's still a lot of people out there that you're not going to convince them. Anyways, you got the purchase order. So the purchase order, you will recall, only deals with inventory. So you will only see purchase orders if there's inventory involved, number one, and number two, you are in a position where you can request the inventory without paying for it at the point of requesting, which would be like ordering something from Amazon, but telling them to ship it to you with the bill in it before you pay them. That's not how it typically works for us as we purchase things as a sole proprietor, but as a business, you might be in that position where you could say, ship me this stuff with a bill, I'll pay it when I get it after I check it out. So in that case, you'd enter the purchase order, which doesn't actually have a transaction, meaning it's one form that doesn't actually impact the financial statements, but one that we need to track for internal controls, one which, once we receive the goods, we can use to create the bill, which will record the inventory. We'll talk about purchase order forms in particular in future presentations, but if you use them, this will become important because we have to track the purchase orders even though they don't impact the financial statements. And then we've got the recently paid items. So recent transactions might be easier than sorting it. And then vendor credits. We'll talk about possibly vendor credits in more detail. You obviously don't see them as much. And then we've got credit card payments, and we'll talk about them possibly as well, which have to do with, obviously a credit card type of situation, which you can also integrate bank feeds in as well. So the main ones are these top ones. Now, normally you'd be tracking the bills. So the bills tab is over here. So the bills, you will recall, are the forms that increase the accounts payable, and you'd be over here looking for those outstanding bills. Before I go there, let me go back one more time just to point out the filtering option. So once you've picked, if you picked all the transactions, for example, then you can filter the transactions by status, open, overdue, or paid. This status clearly typically applies to like the bills, right? So if I go to the bills, for example, those are the accounts payable that we haven't yet paid. And then I might want to sort them by status, looking for the open bills, for example, because those are the ones that we haven't yet paid, or possibly by status of the overdue because they haven't been paid yet. And in some cases, I might want to look for the ones that I already paid so I can confirm a payment, possibly answering a question from a vendor. And then we've got our date range, so we can change the date range. And then we've got the payee. And then we've got the category, which is going to be the expense category that we posted the item to. Okay, so and that could, by the way, that expense category could be useful a lot if you had all vendors, for example, and you didn't put the vendors in there, like the name Verizon as you entered the bank feeds. Then you might say, well, I'm gonna search it by the category that I posted to, like telephone expense, and you can get around that. But you want to have the vendor in there if you can. You might as well put that in place.